Good evening. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Well, looks like it is a turbulent Thursday because the market gave away all the gains from yesterday. It looks like yesterday also just never happened. Sensex closed about that 836 points lower, while Nifty lost over 200 points to close below that 24,200 mark on the day of its weekly expiry. We saw a broad-based sell-off, all the sectors drowned in the sea of red, with Nifty Metal Index emerging as the top underperformer. India Wix also shot up by 1% in today's trading session. Yatin, 24,200, that was the support level for the Nifty, but it looks like we have now plunged below that as well, just a tad bit below that as well. So it looks like the two-day rally was quite short-lived.
Yeah, Lovisha, as you mentioned, it seems that nothing happened yesterday. The Donald Trump victory rally, which we saw yesterday on benchmark indices, faded away. In fact, the Nifty lost over 300 points in trade today, closing at 24,200, which is an important support zone. Obviously, yesterday's level was also one of the levels wherein we could have made a good momentum in general for mid caps as well as large caps, but yes, we failed to sustain. In fact, if you look at the advance decline ratio also today was quite weak. Most of the sectors giving up gains and large cap stocks selling off. Advance decline ratio almost 1:2, and if you look at metal stocks, pharma stocks as well as energy stocks, clearly nervous after today's FI selling. Yesterday also FI sold provisionally almost 4,500 crores. Today's figure also need to be watched out for. But I think the FI selling with or without Donald Trump, with or without the Chinese stimulus continues to impact Indian equities.
That's right. If you look at some of the top gainers on the Nifty 50 list, it was Apollo Hospital. That stood tall, gained about 6% in today's trading session and also hit a record high after it reported quite a stellar Q2 performance. Other than that, we have SBI, HDFC Life, TCS, L&T as the top Nifty 50 gainers. SBI, of course, extending its gain to the fourth straight day. And we have the Q2 results, which is due tomorrow as well. If you look at some of the top losers on the Nifty 50, that include the likes of Hindalco, Trent, Shriram Finance, Grasim and Tech Mahindra. Of course, Hindalco and Trent, Hindalco after Novelis came out with quite a disappointing September quarter performance. Trent also missed estimates in Q2. So yes, they were one of the top laggards in Nifty 50 list as well. But broader markets, they also saw cuts, but less than benchmark indices. Yatin, what were the hits and misses from the broader markets?
Right. So if you look at the gainers, ITI and Swan Energy continue to gain from yesterday's momentum. Both of these stocks up anywhere between 8 to 15%. KC International and Nykaa, both of these stocks also did well after good management commentary. Now, what did not do well is Adani Energy Solution. It was expected to be in the MSCI index, but clearly the MSCI team said that the free float factor here is something which the market doesn't know. And hence they are not including the stock. In fact, they also reduced the weight on two other Adani Group companies, including Adani Power, which also saw some adverse reaction. Trent, after a dismal Q2 number, which was slightly lower than expectations, shares saw almost a 7% dip coming in. Glenmark as well as Blue Star were the other stocks which lost in trade. But the momentum clearly continues in stocks like Welspun Corp, Coromandel, Karur Vysya Bank and KC International, as the stocks gain around 2 to 5% with fresh 52-week high levels.
Yes, absolutely. If you shift focus to primary markets, that was also quite busy and it had some popular names. Swiggy IPO day 2, it got 32% subscribed so far. Yesterday we saw quite a muted first day. It saw about 12% subscription, but today it has been quite higher, 32% subscription coming in for Swiggy IPO. Apart from that, Acme Solar, that was subscribed 63% so far, whereas Niva Bupa Health first day of IPO, it has been subscribed by 62%. But yes, let's start off with the first stock in focus. That is your Apollo Hospitals, top Nifty 50 gainer. The stock surged 6% in trade and also hit a new all-time high. Now, the rally came back, of course, on the second quarter results. The company's net profit surged 59% year-on-year to 395 crore rupees, while revenue also grew by 15% year-on-year to 5,589 crore rupees. Now, the solid quarterly performance, that was aided by increased demand for its healthcare services, which also prompted mid-teens growth across all the segments. The major trigger also came in when the company's digital and pharmacy vertical, which is called as Apollo 24/7, that swung to a profit of 39 crore rupees compared to a loss a year back. Now, what are the brokerages saying post its Q2 update? JP Morgan analysts, they have maintained their overweight rating on the stock and have put out a target price of 7,200 rupees per share. They believe that the healthy revenue across segments coupled with improved hospital margins that drove the Q2 performance. Yatin, Apollo Hospitals, that perked up in today's trade after Q2 numbers. What do you make of it?
So I think Apollo Hospitals' stellar performance. In fact, if you look at the margins, they expanded more than 2% on a year-on-year basis. Occupancy improved, and not only that, the average revenue per bed also saw some better performance versus the market expectations. And I think this is one space which is insulated from the global turbulence, the global geopolitics which is currently happening, the global political arena. I think healthcare is one sector which always remains quite close to the institutional investor side, and with good performance coming in on the quarterly basis, we saw some good 5 to 6% gains coming in, almost 6.5%, where Apollo Hospital shut shop. So good move coming in. But Lovisha, as you were mentioning in your opening comments, Hindalco, this is one stock which was clearly the accident of the day. Shares plunged over 8.5% in trade after its US subsidiary Novelis reported weaker than expected numbers. Now, if you look at Jefferies, they obviously have a buy call in Hindalco with a target of 800, but Novelis' performance clearly disappointed according to them. The Q2 EBITDA fell by nearly 5% on a year-on-year basis, almost 4% lower than the consensus estimates. If you look at the volumes, they grew only 1% year-on-year basis. So, the automotive segment is a clear pain point at this point in time. Obviously, the can business is something which has held out the profitability. In fact, Novelis expects further margin pressure in H2, and they have suspended their margin guidance. So the guidance earlier, which was given by the company, it stands withdrawn, and no further guidance updates are given. In fact, the recycling profitability of Novelis is impacted by the sharp rise in scrap prices, and also if you look at the automotive demand, that is slightly slower than what the street was anticipating. So I think a mix of outlook as well as weaker numbers led to the fall in the shares of Hindalco.
Yes, that's absolutely right. We have another metal stock in focus today, that is your Tata Steel. The stock opened in the green, traded positively, but it failed to hold the gains, and it settled below that, down by 1% in today's trading session. Now, the reaction came in after the steel maker swung back to profit of 759 crore rupees in the Q2, marking a strong comeback from a loss of 6,511 crore rupees in the same quarter last year. Moving on, there was reduction in expenses by 6.3% year-on-year due to lower royalty rates. Now, the geographic performance, that is something that we need to watch. India's EBITDA per ton at 13,000 crore rupees had come in, while the street was estimating about 11,000 crore rupees. Europe continues to struggle. It reported a net loss of $75 EBITDA per ton. This comes as they go for a revamp of UK blast furnace as well. But yes, the rising debt levels, that is a concern. It perked up to 89,000 crore rupees from 77,550 crore rupees in the year ago period. Brokerages, what are they saying? They remain optimistic on the stock, with JP Morgan putting out a target price of 180 rupees per share. Yatin, apart from Q2 results, the management commentary has turned out to be weak as well. What do you make of it for Tata Steel?
I think the management commentary was weak, especially to do with the fact that the European business, will continue to struggle in terms of profitability for the second half as well. For the India business, I think, they had a reversal of water charges. So that provision boosted the, other expenses, which, in turn impacted the margins positively. So if you adjust for these provisions, adjust for the management commentary, it was slightly disappointing. In fact, the management commentary which started in the morning post the market open clearly turned into profit booking, as the outlook for metal stocks as well as steel as a commodity remains slightly bleak. So in terms of pricing and in terms of the overall demand situation, I think the management was slightly cautious, which the markets did not like. shares after opening a 2.5% gap up ended the day lower by 2%. So almost a 5%, 4-5% swing coming in from the intraday highs for Tata Steel.
Yes. We have another Tata Group company stock in focus, that is your Trent. The stock crashed 8% after its Q2 figures missed the estimates. Now also it settled about like 6.5% down in today's trading session. Well, revenue rose about 39% year on year to 4,157 crore rupees. But Money Control, they had estimated revenues at 4,365 crore rupees. Similarly, profit also rose well below what the street was estimating. It rose by 47% year on year to 335 crore rupees, but it missed estimates. The management has attributed the weak performance to muted consumer sentiment in the retail business. However, they've opened 7 new West Side stores and 34 Zudio stores. Fashion Concepts also registered double-digit like-for-like growth. The management came out saying that the beauty and personal care, innerwear, footwear, all of them have started to contribute 20% of the revenue. Yatin, despite the Q2 miss, it still fared well, but looks like investors are quite skeptical with its high valuations compared to how it has performed fundamentally in the Q2. So what does it look like for Trent?
Exactly, Lovisha. I think, yeah, as you mentioned, that the valuations, these are a concern point, because the higher the company's valuation, the more the expectations of investors. And when you try to disappoint even by a small margin, the reaction on the share price is much bigger. So that is what exactly has happened. A slight miss in revenues and slight miss on the profitability has led to a big fall in share price. Obviously, the management said that during the festive season initial period, the sales remained slightly muted to the expectations. So I think the management commentary, which was cautious, plus the revenue miss, turned that investors start booking profit, especially in the market conditions wherein the frontline stocks are correcting, and now Trent is a part of Nifty 50. So a lot of institutional eyes are on the results, and slight bit of disappointment, as I said earlier, has led to a big sharp correction in the shares of Trent.
Oh, yes, of course. Tonight we also have the US Federal Reserve's policy decision. The consensus remains that the Powell would opt for a 25 basis point rate cut. But I think the markets have turned quite skeptical that with the Trump's win and his hawkish rhetoric, that the rates could be elevated from here on. What do you sense?
Yeah, so I think Donald Trump is an advocate of lower interest rates. I think people also believe that if the Federal Reserve doesn't, cut rates aggressively, he'll fire the governor. Anything can happen under Trump, because this is his last term, his last election. So I think people believe that Donald Trump will be more aggressive in pressuring the central bank to cut rates. Obviously, it's anybody's guess of what the Federal Reserve will do tonight. But we also have SBI results which are coming tomorrow. The earning season is ending here. A lot of disappointments are seen. The Federal Reserve, what it does is something we'll watch out for. And additionally, China also has its important meeting, which clearly shell out the details of their stimulus package. If they want to increase that stimulus, if they are trying to devalue the yuan, something which is taking shape after the US election. So to watch out for will be the Federal Reserve policy, China stimulus, as well as SBI earnings back home.
Yeah, so a lot of catalysts, and we'll be watching out all of that. But we have come to an end of this edition of The Closing Bell. Until then, signing off, Yatin and me. Do stay tuned to moneycontrol.com for all the news updates and market insights.